Can you handle losing? So I was talking to our resident psychotherapist Keith Tunstall this morning, and this subject came up and about losing and how traders it is very difficult to handle having losses. I understand that, but as traders we have to develop that thick skin for having losses because we know that we're not going to win all the time, and yet still people want to have don't want to have losses, or and then if they do have them, they don't deal with it very well, and it's not comfortable if you do have losing trades, of course. And it was interesting what he said to me. He said when he's worked with traders that he will often ask them, how many times out of 10 would you expect to win on a trade? And he said, and the common answer is what people, when they come to him, would say is somewhere like around about 8 out of 10 times. And that seems to be a common sort of answer. And yet the reality is most traders aren't going to be having an 80% success rate across all of their trading. It's unlikely that you're going to do that. So there are ways of doing it. Of course, there are ways of doing it, but for most traders, 80% an 80% success rate is less likely, and so we have to get used to. Let's just pick a different level. Let's pick 50%. So if you're right 50% of the time, that does mean you're wrong 50% of the time. But of course, people are geared up and are switched to being right, and then when they're wrong 50% of the time, they don't enjoy that. And it's not necessarily comfortable, but we have to get used to being uncomfortable in trading. So what I would suggest to you is that you have to embrace these things, and you have to go into every trade thinking it's going to lose, rather than going into every trade thinking it's going to win. And I know it sounds pessimistic, but it's just a way to set your brain up, because otherwise, if you're going into every trade thinking please work, please work, please work, then you're sort of setting yourself up for disappointment if the trade doesn't work. Whereas if you switch that around and you go into every trade saying, yeah, okay, I've got my risk, I know my risk reward, everything else, and it may well lose this trade, and think about it in that way. But you're already gearing your brain up for, if it's a loss, then you've already sort of accepted it at outset. Whereas a lot of people get into a trade and they get excited about the prospects for the trade, and then of course if it loses, then they get despondent and so on and so forth. So it's again just a slight variance, a slight change in your mindset towards each trade, so that you're helping your mindset towards each trade, because otherwise you're constantly setting yourself up. If your trade works out, it goes to your target, then you get really excited, but if it doesn't, then you get really despondent. And no wonder so many traders quit at trading, because as soon as they have a few losing trades, they can't handle it and they want to quit. And so it's something which I always say that people need to spend time on, most of their time. Of course, there's a reasonable amount of time that you have to do in analysis and looking for trades or whatever and scanning the markets, but most of your real time, once you've learned your strategies and whatnot, is spent on your mindset and being able to deal with series of winners, series of losers, and all that sort of stuff. So you have to ask yourself, can I handle losing? So put yourself in situations where you say, okay, I've got a strategy, and for argument's sake, it's right 5 times out of 10. So that you know that over enough trades, and statistically you can work this out using statistics, that if you have a strategy with a 50% win rate, at some point it'll have X number of losing trades in a row. Can you handle that? And at some point it won't just have X, let's say 10 losing trades in a row, which certainly a strategy with a 50% win rate will have. If you take enough trades, if you do 1,000 trades, somewhere within those 1,000 trades, you are going to have a run of 10 trades in a row, maybe 12 or whatever. That's why we use risk management, because if you're risking a small percentage per trade, then you can handle having a larger number of losing trades in a row. No one wants to accept this stuff. No one wants to admit this stuff. But this is the reality with any sort of trading. Whether you're trading a a systematic approach with a given strategy, mechanically based strategy where you just follow a certain rules, that's going to do it. Or whether you're even a discretionary trader, that you're still going to have the same with discretionary trading as well. So it doesn't matter what the approach is. So you have to sort of say, well, okay, well, how will I deal with that? How would I deal with a larger drawdown as well? So if you're having a drawdown, and no one likes to talk about this sort of stuff because everyone wants to talk about the money, and the money comes, but you've got to be able to deal with those drawdowns that are inevitably going to happen. If you're going to take 1,000 trades, do you think your account balance is just going to keep going up and up and up? There's going to be drawdowns within that as well. It's a case of how do you deal with the drawdowns when they come to be able to then carry on trading through to then come through the other side. And so put yourself in these situations, but don't just look at a back test and say, oh yes, it had a drawdown there and it had a drawdown there and it had a drawdown there. You've got to immerse yourself. Let me actually take you to a chart. So I've got a chart up here of the S&P. I'm not even talking about drawdowns now. I'm talking about, let's just take a trading scenario. So let's pretend you got into the S&P. Let's bring up the pen. You got long the S&P, let's say around here. So you got long the S&P over here, and you're in this S&P for a longer trade. Okay, so let's say you've got a target, right up there. So you're in it for a longer trade. So you've got in here, and maybe your stop loss was just below that low. Okay. So what's happened is as we can see, the S&P fired off up here. Maybe you didn't move your stop loss. Let's pretend that you didn't move your stop loss, because when it came back down, it got close to your stop loss over here, but didn't quite get there. Okay. So we can see with the benefit of hindsight that, yes, if you stuck with the trade, it would be fine. But immerse yourself in it. How would you feel when it started rolling down, when it started coming down against you? Really get your mind into these situations, whether it's a single trade like this. How would you feel? Because I'm in swing trades all the time with our swing traders, and I can tell when they're getting, even when we're in profitable positions, they start getting a bit antsy because they want to bank the profits. Or if it starts pulling back against us, you can tell, oh, Charlie, do you think we should move our stops up now? All legitimate questions. But you can tell when people want to start protecting their open profits and stuff, and that's perfectly normal. And certainly there are times when we obviously need to do that. But really immerse yourself in a situation like that. How would I be feeling at this point? Well, how you should be feeling is, well, it's a trade. If it's not to be, it's not to be. And if it's going to come back down and stop me out, yes, I've sat in some wonderful open profits here. And this is where people go wrong, because they'll say, oh, I was sat in all this open profit, I should have banked it. Yes, but that analysis doesn't belong to you. That analysis belongs to some other trader. You had a trade here where your analysis was calling for the market to go higher, further up. So this analysis of jumping out and banking a profit in this zone, that may be for another trader who's got a different view on that market or different strategy or whatever, and they've already got an exit. Your exit is way higher, so you have to stay with it. Because if you take 100 trades like this, and then as a result of having a few that are inevitably going to roll over, and let's say this one did come down and stop you out, then you start saying, oh, I'm not going to let it do that to me again. So the next time, as soon as you're in a bit of profit, you bank your profits. But then what you're doing is you're not getting those bigger wins, which is what you need, what your account needs, in order to pay for when those losers are along and still give you the profit on top. So it doesn't matter what your strategy is and what your risk-reward ratio is, whether it's big risk rewards or very small or even inverted. It doesn't matter. The point is you have to stay true to yourself and your plan and your strategy, because otherwise, I always say the market is there to teach you bad habits. And like in that situation there, very, very quickly, I've seen this so many times over the years, a trader will have an experience, let's say like this S&P, and let's say it came down, and let's say that it actually stopped them out. They'll then say, I'm never doing that again. And that's it. The market has won. It's beaten you. Because then on your following trades, you're going to start banking your profits too soon. And so you never then participate in those bigger runs, if that is what you're supposed to be doing, of course. So again, it's all about staying true to your strategy and plan, and not get involved in all the other noise that's going on there in the market. So coming back to it, immerse yourself in not just trades like that example there, and how you would feel. Really get into it so you can then say, right, okay, I know this is how I would feel, but what do I need to keep telling myself when I'm in this trade, just like I've just gone through? And it's exactly the same with drawdowns. What do I need to keep saying to myself if I'm in a drawdown? Is this perfectly a normal drawdown situation? Or in which case, I have to accept that my strategy is going to have drawdowns. And in order to, like any strategy will have, in order to get to those big gains, my strategy is going to have drawdowns as well. So I think it's a really important thing for people to spend time on. Don't just spend your time. What I find is too many people spend all their time looking for the holy grail of strategies. And strategies are very important. You've got to have strategies. But even with the right strategy, you can still end up messing it up because of your brain and because of your psychology gets in the way. Don't let the market beat you, because it will try to encourage you to form bad habits. Don't allow it to happen. Anyway, a little bit of a psychology video there for today. I've just realised I'm 11 minutes in or so. That'll do for today. Happy weekend, and I'll see you next week.